Yes, you're welcome to Restore Bridge Academy. My name is Kiden Sarah, and I'll be taking you through entrepreneurship. So today we are going to look at our lesson 2, sources of government revenue. So in our previous lesson, we talked of what is understanding government revenue and the reason why government needs this revenue, and then also we talked about the importance or the uses of this government revenue. So today, let's look at the sources of government revenue. Having looked at understanding what is a government revenue, we need to understand what are the sources of government revenue. So let's get started. Think about this. Every time someone buys a soda, if you buy a soda, sends mobile money or brings goods across the border, a small part of that money goes to the government. So that's how the government gets the money it needs to run their country. It doesn't have a money printing machine. It can use any time. So this money is good from the citizen, and then it may be indirect or directly. So by the end of this lesson, you'll be able to answer what are those different sources of government revenue. Be wondering, where does government get money from? So you'll be able to answer that question. So let's look at the sources of government revenue. We see that the government collects money from both the taxes and then non-tax sources. We have the tax sources and then the non-tax sources. So they collect from them all. So let's look at the tax sources. So these tax sources, we see that the tax is a compulsory monetary payment charged by the government on individuals or companies to help it finance its expenditure. So we see that these taxes can be indirect tax or direct tax. So it is not charged in return for any specific service rendered by the government to the taxpayer. So these taxes are the most important sources of government revenue. We see that some of the taxes levied, they include the income tax, we have the value added tax, the custom duty, and then the excise duty. We are going to look at this one on one. So let's look at the different types of taxes. We said we have the indirect tax and then we have the direct tax. So we have the income tax. This income tax, this is a direct tax. So we see that this is the money paid by individuals and businesses on money they earn. So it is the individuals and then the businesses are the ones that pay this money on the money that they earn. So the more money the more someone earns, the more tax they pay. So, for example, we have a business owner pays income tax on the profit they make each year. So it may be each year you can plan to pay each year, or you can decide to pay every month. So, and then we have what we call payee. Payee, it's a payee in full, it is pay as you earn. This is the type of income tax taken directly from a worker's salary. It is deducted directly from the income, the worker's salary. So it is collected by the employer and then sent to the government. So the employer is the one that shop it direct. It reduces direct. So, for example, if a teacher earns a salary, part of it it's automatically sent to the government as payee. So there is always percentage that they get. If they can say we are getting, according to what you're earning, you can decide to say 15% is going to the government. So by the time you get your net pay, it means they have already deducted the government the money that goes to government, which is part of your taxes. So everyone that works, everyone that is employed, it means everyone that is earning a salary is making the payment of a pay. It's making this it's paying a payee. The taxes are always deducted, which is called pay as you earn. And then also we have the VAT, the value added tax. So this one is a tax added to a price of a good and services. So when you buy something like sugar, clothes, or a phone, the price may include the VAT. This is indirect. So you pay something that indirectly you cannot notice, but then they have already included there. So businesses collect this tax and pay it to the government. And then also we also see that import, we have what we call import and export duties. So these are taxes charged on goods coming into, the imports coming into, or going out, which is export of the country. So import duty is paid on goods brought from the other country come into a country. For example, if Uganda is getting goods from Kenya, that is, they charge them what we call import duty. And then also we have export duty is paid on goods sent to other countries. If Uganda is sending goods to South Sudan, that is the tax that is levied in, it's called what we call export duties. For example, a business importing cars pays import duties to the government. So let's look at what are those non-tax sources. We said we have the tax, the government revenue they get from the tax sources, and then we also have what we call non-tax sources. So we see that these non-tax sources is the income earned by the government from sources other than taxes. For example, the fees. So this is the payment to government for services offered to people. For example, the court fee, registration fee, passport fee, and then licensing fee. All these fees, they go to the government. And then we also have what we call fine and penalties. Fine and penalties. So these are charges imposed on offenders of the state laws, such as the punishment. This one can be as the punishment for having gone against the law. For example, the police traffic fine. So this police traffic fine, when they fine you in a car, when you don't have a driving permit or your driving permit has expired, of course, they will need, or you're overspeeding, they will have to fine you. So this money that you pay, it goes to the government. And then we also have what we call gifts and donation. The governments are also, they get their revenue from gifts and donations. We see that these are voluntary contributions made by individuals or organizations to the government. It can be individuals, they can decide to give gifts or donation to the government, or the organization to the government. And then we also see what we call borrowing. The government also gets their revenue from borrowing. We see that this refers to the loan obtained by the government within or outside the country. It can be within or outside the country. And then we also see that earning from government enterprises. Earning from government enterprises. We see these governments, they put in enterprises. So these earnings that they get, it goes to the government. These are profits earned by the government from the sales of goods and provision of services. So we have what we call proceeds from national lottery. So this proceeds from the national lottery, this is the revenue from sales of tickets issued by the national lottery for financing a specific social project. And then we also want to have rent and rates. So this is money charged by the government on building or premises leased by individuals or the organization, or that is what we call the ground rent or the ground rent. So we also have this is collected by the government. And then we also we have road and bridge tolls. So this refers to revenue collected from users of roads and bridges to enable government to maintain these facilities. So we see that one of the example of the road we have Entebbe Express. So Entebbe Express, when you're using it, you have to pay. So it will help the government get its revenue. So those are some of the sources where the government gets revenue. They get revenue, remember, they get revenue from taxes and then also from non-taxes sources. So thank you. Thank you for joining in. Have a great day. Let's meet in our next lesson.